Motivation marketing you in 22. Happy New Year, happy 2022. Chris Bettis from Fluent Mortgage, market fluently. All right, so our slogan internally and what we hope maybe you'll adopt is United in 22. United in 2022. There's so much division right now. They're trying to polarize us administratively, right? The left, the right, the conservatives, the liberals. On mortgage, I'm seeing bankers versus brokers. At home, I'm seeing so much division and strife. Won't get politically about it, but I challenge you. United, right? There's an old phrase, united we stand, divided we fall. We are stronger united. You and I are brothers. You and I are brother and sister. United. There's the motivation for today and this week. All right. So little longer one because, New Year. We're going to look overall at 2021, kind of what occurred. I'm going to talk specific to January and this week, but a little bit of predictions for the coming year, all 2022, just like normal, right? So in the past year, really, two things dominated the headlines. Except for the first couple months, it was all about hyperinflation. And was the Federal Reserve going to react to it? Well, they finally did. Okay, so in November, the Federal Reserve started reducing their bond purchasing program. And so the reason for that reminder is we've got some issues economically. In order to help deal with the recession that we went into, we have to spur up the economy. And real estate and mortgage are two of the top ways to do it, right? So the Federal Reserve was artificially forcing rates down, supply and demand, by buying massive amounts of bonds. And they're saying, we can't do that anymore because of inflation. So starting in November, they started reducing how much they're going to buy. And by the end of Q1 of this year, it should be completely finished. So they're going to have to start selling bonds, right? So the exact opposite, that'll start driving rates up, okay? We were the first ones to let you know about this because remember, everyone in the world, including the Federal Reserve, kept saying transitory, temporary, a blip because of COVID, because of supply chains. We said, no, it's not. It's 1980 all over again. They finally admitted the case. There you are. Obviously, the C word, right? And let me preface this just like I do every time. This is not biology. This is not politics. This is merely economics. We're going into our third year of the C word, COVID. Again, we were the first to announce it, like almost 4 months before anybody else in Oregon. I started talking about this actually in December. My first post on Facebook was January 10th, 2020, talking about how they're going to bankrupt the world because of COVID. Here we are. That was the last year. Again, not politics, just economics. Hyperinflation and COVID dominated the last year. In terms of January, what to expect and come. Rates have skyrocketed already. We're about 0.25% higher since last week already. Is that a surprise? No, not at all, right? Like history repeats itself. We know cycles for 170 years, right? Recession, boom, like it happens over and over. They cause it to occur. We already know in January, rates rise tremendously the first few weeks. Investors already are moving their portfolios around. It's happened 15 years in a row. We know it's coming. So for the first several weeks, much higher rates. We've already seen 0.25% jump. Literally today alone, we've already seen multiple reprices. Some little bit of good news, though, typically towards the end of January, we see a little bit of recapture in terms of those rates. Short term, if you're a mortgage person, you should have locked this morning, right? So lock, be afraid in terms of your rates. Midterm, it's really tough for me to predict. And I know I talked about this a little bit last year, extreme volatility. The hard thing is administratively, we're getting mixed signals. I'm not judging them. It's just you got to pick a path, right? You can't say you have a path for COVID and then announce last week that there is no federal plan, but you're still doing things to influence. Like you can't go north and south at the same time. You can't hammer your gas and hammer the brakes at the same time. So I'm not judging this isn't politics. It's just it makes it tough to predict, right? A little bit schizophrenic at this point. Long term, we know rates are going to come up tremendously. They're already telling us about 2% is what we're expecting. Wild card, of course, COVID. How are we going to deal with it as a nation or as a state, but especially nationally? And then the wild card, I've mentioned this one other time. Here's my prediction, and I hope it doesn't come to fruition. But if the dollar is no longer used as the international commodity, the international standard, huge change to the country, huge change economically, major influence when you print trillions of dollars. So that's the wild card. Remember, I've called flipping the bond market first, right? I've called when rates are going to raise first. I called when Trump had blackmail on the Federal Reserve, right? I called COVID. I called Omicron. I've called almost every single thing months in advance. Hopefully I'm not right. I haven't heard any chatter on this. The dollar's a big deal. So this is the year internationally. There's so much talk about that. There's tons of pressure. We're going to see what happens there. So that's the interestingness. All right. So mortgage, of course, right? We're risk mitigators. And if you notice, if you study a lot of mortgage people in economics, it's mostly doom and gloom. But to flip the coin over, right? For a balanced approach, real estate. Typically, NAR is a little bit happily ever after, right? Salespeople, good. I'm really optimistic about your market, though, this coming year. For the last year, values went up 14%. That's amazing, right? However, supply was down 13%, so that makes sense. You should go up because of supply and demand. Really, it's just a wash there, but still up 14%. We have 2.12 months supply nationally, so well below the 6 months. That's kind of the new normal. We've been told to accept that. My humble opinion, most people in real estate say 2022 should be an amazing year, right? Like if you had a good year in 2021, which I'm going to bet you did if you're a producer, if you worked, 2022 is supposed to be incredible. So at least for the first 6 months, 9 months, this year's a year to grind, to get it, to achieve and destroy your goals, to completely level up. This is the year. I'm really excited for everybody. Now, threats, right? There's always threats in markets. So here's the things as you're going down this incredible 2022 together. United, right? We're going to do this together. Family, VIP realtors, like we're going to get it. Here's the threats. A proliferation of fake quals. As we know, people want to work less. I saw a lot of top producers traveling a lot more. They're doing a lot of coaching and traveling and leisurely, but they're not qualifying the veterans. It used to be once a week. Now it's at least twice a week that I'm getting someone who was never pre-approved. They never saw their income. They never pulled their COE. Be warned, check in advance. Protect yourself, protect your clients, okay? Obviously, inventory is still a consistent issue. We learned to deal with that the last year. But here's the thing I caution you is as rates go up so quickly over the next few weeks, and we know leverage, what's the most our buyers can afford, understand as we see rates skyrocketing in the next couple of weeks, you need to drop down or get a new pre-approval letter because you have less leverage. So that's my concern for you is making an offer as of yesterday when they can afford less tomorrow, okay? But it's going to be an incredible 2022. As I usually do, here's the charting for the week. There's not a lot going on. I don't even care. I'm not going to talk about it. Again, we expect to see rates jump if history repeats itself. All right, guys, it should be an incredible 2022. We have an opportunity to gobble up market share. United, I'm excited to drop the family, the VIP benefits for you all. So have an amazing day. FluentMTG.com if you have any questions in market. See you next week. Bye.